Hi there, Michele Marsland of Marslands Accountants. And today I'd like to talk to you about savings interest. Now, as an accountant, we're not really interested in your savings for many a year because your savings interest has been so low. Often I say, oh, how much you got? Oh, less than £1, because interest rates were really low as well. But in the last couple of tax years, that is now starting to change. And one of the things I was reading an article about, it suggests that there's over 6 million people in this country that are suddenly going to have to start paying tax on their savings interest. So if this could be you, listen out now, all right? Because I'm going to tell you what you need to look out for. Firstly, you have to have some money in savings, all right? That's a big plus one, all right? Secondly, we're not worried about ISA savings, all right? If your money's in ISAs, it's protected from tax, all right? That's the whole point of an ISA, okay? So the thing you need to know is you need to know if you've got savings, that you'll be receiving interest on it, and if you're receiving interest on it, how much interest it is, right? That interest is for a tax year period. So it doesn't matter when the interest received, it's when you it's how much you have received between the 6th of April one year and the 5th of April next year. Okay, so it's in that 12-month period, not a calendar period. All right, so that's the first thing you need to know. Now, if that amount is more than £1, it has to be declared on your tax return. So what if all these people say, well, I don't do a tax return, I'm employed, I don't need to worry about this? Yes, you do, all right? You still need to worry about this because it's still taxable income, all right? So if you're you haven't earned over your personal allowances of £12,500, then yes, this probably isn't a problem for you. But for most people, because they're earning something, whether it's as an employee, self-employed, buy-to-let, whatever it may be, most people who are earning over £12,500, if they also have savings interest, this savings interest needs to be added to their income. So if you're an employee, you need to figure out if you've got any savings interest, and then secondly, you need to then declare this to HMRC. Now, if you're employed, you've got to go and do it one way, all right? I'm not going to talk about that today, but it's quite easy to do, all right? It just needs to be coded out for you, all right? But if you're self-employed or you need to do a tax return for a couple of reasons, then you need to go and tell HMRC. Now, if it's over £1,000 and you're a basic rate taxpayer, you're going to pay tax on it, all right? Because everybody is assumed to pay basic rate tax up to £1,000 at 20%. Now, if you're a higher rate taxpayer, that limit is reduced. It's halved to £500. And this is in the tax year 24-25 I'm talking about, all right? So if you're a higher rate taxpayer, you're only allowed to have £500 worth of interest before you pay 40% tax on it, okay? Now, one of the things that really is going to catch people out is sometimes this interest gets added to your other income. So what's going to happen for some people, this interest might even push them into the 40% tax band, all right? So you need to watch out for that one, because that's what this article I was reading suggests is going to happen to quite a few people. Overall, they suggest there's about 6 million people that are going to get caught by this. That's a lot of people in the UK that are suddenly going to get caught by this. This is why I'm explaining about it now. So if you've got savings interest, you're earning over £500, yeah, then you basically need to know about this, because if you're a higher rate taxpayer, so you're over the 100k, you probably will end up paying tax on it much sooner than most people. But if you're under 100k, you've got to watch out for this £500 limit, all right? If you're earning more than £500 on your ordinary savings, this needs to be taxed, and probably at 40%. Right? The best way to get it done is to submit it on a tax return. If you've got a personal tax account, you can possibly go in there and get it coded out. That's another option. But tax return is normally the easiest way to get it done, and to get it done properly. HMRC will adjust your PAYE code if you are employed, but it's not quite that easy, because obviously they need to be told the figures. So my recommendation is probably go and get yourself onto the tax return system, put everything on there, pay the tax, and then you know it's all paid. Yeah. If you wait for HMRC to find you, just remember there will be interest, there will be penalties, because they find you first. So if you've got savings interest, just know it needs to be declared once it's over £1, and once you're over £500, you're probably going to be taxed on it, all right? If you're a basic rate taxpayer, you just have to watch that the interest doesn't push you into the higher rate taxpayer. So hopefully I've made that clear to you, all right? If you're not sure, the best thing to do is to speak to HMRC, which is hard to get through to them, but give it a try, or go and have a look on your personal tax account and just make sure all your interest is on there. All right, we're talking UK interest, we're talking basically not ISA interest. All right, thank you very much. Time to shine.